There we go. Live. How are you, Adam?
I'm good, thanks, Ryan. How are you getting on?
Yeah, really good, mate. Really good. Thank you very much. So we're live across our Facebook pages. So Lauren and Ryan's Facebook page, Adam's business page, which is Partner Finance Facebook page, and we're also live on YouTube as well. So we'll let a few people come in. As always with these, if you've got any questions whilst we're live, please fire them across. If there's specific mortgage questions for Adam, we'll be happy to answer them. If they're property related, likewise, I will as well. But if you're seeing this later as well, please do comment. We're more than happy to answer questions afterwards. So there we go. So how's things with you, Adam? How's business since we last spoke? I think it was about a month ago we did our previous chat, wasn't it?
Yeah, I mean, April was my best month so far this year, and carrying on into May. We've got just over a week and a half left of May. I mean, May's been a really good month as well. So despite all the stuff in the media you read, is the property market and the mortgage market is still pretty busy, despite not having it's not the support from the stamp duty incentive we saw last year. It still seems to be ticking over really nicely.
I think we're still seeing a lot. It's just, we've talked a lot about it as partners in avocado across, the areas we cover. Obviously, I'm specifically Tylerst and West Reading, but across the local area, it's still just the lack of supply, which is, keeping demand high, which is good. So there we go. Well, look, got a couple of topics for everyone to discuss, discuss with everyone today. First thing we're going to jump in, it's been quite a hot topic, probably for the last year or so now, but really come to the top of the agenda with the rise of inflation up to 9% yesterday. But just in general, the cost of living, whether it be energy bills, petrol prices at an all-time high. I drive an electric car, so I'm not affected, which is good. But I've seen that they are quite high, and energy bills as well. So we'll jump in cost of living. So what's your views on it? Inflation, 40-year high, up to 9%. Which is obviously staggering. The general cost of everything is increasing. How do you think that's going to affect, or will it have an effect on the market, short term and long term? Adam, do you think?
In the short term, I don't. It still feels it hasn't put people off. What I can see, the first time buyers, they just want to get on the property ladder, and it doesn't seem to be putting them off, despite the extra costs. I think there'll be other luxury items that will be taking the hit more because of the inflation rather than the housing market. So what I mean, things like retail, I think people buying less clothes, maybe less holidays, eating out less. They're also the things that are hit harder. I think the property market, there'll always be a general demand for housing, just due to the chronic lack of supply as well.
I feel the same. I think obviously the headlines are pretty daunting when you look at them, but actually, inflation, that doesn't really have an effect on housing prices. Is when they try and increase the interest rates to bring down inflation. That's obviously going to have a massive impact on mortgage rates, isn't it? Which then it will turn out there's going to be a bit more challenging, or more. It's going to cost a lot more to buy the same house in a few months and years time, based on what we're seeing at the moment, which is interesting. Interesting times, though.
Yeah. But that is the big concern is if interest rates keep on rising like they have done certainly this year, it's gonna start impacting affordability. The higher the interest rates, the higher the monthly payments are. Of
course.
Going to.
Are you seeing much shift in affordability from banks and from lenders at the moment, based on what we're seeing on a wider scale with the cost of living?
So it depends on different type of mortgage. So if stick to residential versus the buy-to-let, at the moment lenders seem to be really clamping down on buy-to-let mortgages and the landlord. Where what they're doing is, due to the increase in the cost of living, they are increasing the stress testing they're doing on the rental cover for the affordability of the actual buy-to-let mortgage. And the reason they're doing this is fears of the cost of living will push the tenants into rental arrears.
Okay. So their cost of food's going up, petrol prices, gas, electric, everything's going up. So lenders are worried that tenants suddenly can't pay £950, £1,000 a month, and they're going to fall into arrears quite quickly. It's interesting.
so lenders are being very harsh on the buy-to-let side of things at the moment. The residential, they seem to be actually increasing their salary multiples. So TSB have increased their salary multiples from 4.75 up to 5 times salary.
Just to confirm, so multiples. Sorry, that's the amount someone earns and how much times they can buy. Yeah.
Yeah, the gross annual income times added together times 5 with TSB. Now, Nationwide, interesting. They've been doing something called Helping Hand, which I mentioned last time. Now they've actually improved it. So they were doing it, and they had to at least have a 10% deposit, so it'd be 90% value.
Yeah,
you get 5.5 times your salary as a first-time buyer, as long as you earned as a single applicant £37,500 a year.
Okay.
They've now reduced the deposit to a 5% deposit, so now can be 95% loan to value, and they're still going to do 5.5 times annual salary for first-time buyers. So our lenders actually.
By the looks of it, looks like they're not too worried about things.
Yeah, they seem very buoyant in terms of just trying to help first-time buyers, and they obviously realise if because the house prices of the ratio between income and house prices is the biggest it's been in history. The lenders, if they basically want to sell people mortgages, they have to increase these because wages aren't going up. There's only way people make these houses affordable. The banks will increase their salary multiples.
Obviously, our job is, my job is to sell houses. Your job is to advise and sell mortgages. But is there any advice you'd give to first-time buyers? I know sort of advice I give them, but any specific advice, is it worth maxing themselves up now, whereas the cost of living may still be increasing? Or is it worth just being a little bit more tentative? What's your sort of views and what sort of advice would you give to first-time buyers at the moment?
I would always try and buy for what your maximum borrowing is within reason. So you don't say you could afford a 3-bed terrace. Don't play it safe and buy a 1-bed flat. Think about how old you are. Whereabouts are you in your life plan? Are you close to getting married and having children? They might want to, rather than moving in a couple of years, buy that sort of good starter home straight away rather than waiting a few years because costs of stamp duty and the way house prices are going, you could end up shooting yourself in the foot by not pushing yourself enough. Makes
sense. I think the advice I always say to people, you know me really well. I love a spreadsheet as much as the next guy, but it's just important to, I think, work out how much you are going to be spending because when sometimes a mortgage can be a little bit cheaper than your rent you're paying, but at the same time, you've got to make sure that you can keep going. We talked about buy-to-let lenders getting concerned that tenants can't keep with the payments. Well, that's serious, obviously. Much more serious if you can't keep up with your mortgage repayments because then it's you're in a world of hurt, which we don't really want to get into. So interesting. Well, look, let's move a nice segue onto actually to mortgage updates at the moment. So sort of rates overall, how are things looking as a sort of a broad average at the moment, Adam?
So the Bank of England moved up the base rates last, it would have been this month, we were still in May, to 1% now.
Yep.
Which is the highest it's been since 2009. And as a result of that, there's been a bit of a ripple throughout the fixed rate prices of mortgages, whether they have gone up. So there is the average rate now is tipped to peak this year at 3.3%, and it was the first quarter this year it's at 1.8%, so it's a 1.5% drop. Increase even. Wow.
Sorry, so it's tipped for this year. Experts are suggesting that prices or rates, an average rate could be up to 3.3%, whereas what you said there, Q1, the average was around 1.8. So you said 1.5% increase on average in the rates.
Yes,
seems that's quite a high drop. So in layman's terms, obviously, it's, when you talk about 1%, 2%, it doesn't sound huge amounts of money, does it? It's very hard to get your head around it. So let's take an average sort of 300 grand mortgage, 10% deposit. I mean, would you know roughly the cost or how monetary value people are going to be affected by that increase?
Yeah. So in terms of that sort of 1.5% increase on a 300 grand mortgage on a 25-year repayment term, you're looking at a £225 a month increase.
Wow,
which is substantial.
It's a lot, isn't it? And on top of, sorry to keep going back to it, but I know my gas and electric bill has gone through the roof. But with those going up and everything else, that's a lot to take on board, isn't it?
Yeah, I mean, it basically equates the best part of £3,000 a year in extra mortgage interest.
Yeah.
So what we are seeing in the market is a shift. So 25% uplift in searches for 5 and 10-year fixed rate mortgages, as you've got people that are concerned about the cost of living and their mortgage going up. They're looking for greater certainty to control their finances over the long term.
From what I've seen, the 2-year fix have gone up probably quite dramatically. Is that fair to say?
Yeah, I mean they are the products that have gone up the most. They're now, historically, you could get a 2-year fixed rate would offer you a significant saving. It may in the last sort of 10 years, it's been up to sort of 1% cheaper than say a 3-year or a 5-year deal. Now they're more or less the same price. So Nationwide actually offer the same deal for a 2 and a 5-year at the moment. So you're getting no discount for going on a 2-year deal. So
let's put this in, if anyone who's watching who's either considering a remortgage or is looking to upsize at the moment, for example, if they were to take out a 10-year fixed mortgage, for example, what's their options? Let's say it's 10 years is a long time, obviously. In 6 or 7 years' time, they decide they want to move again. What options have they got available at that point? Is there any issues with them fixing for that long?
So most lenders and most products will have built into the product a portability feature, a flexible option, which allows you to basically move your mortgage with you to your next house. Now, what some people don't realize is they think that's a given. All I would say is, if you want to port within your term, is call your mortgage advisor up and get a mortgage and principal done with that lender again to make sure that you're still within the credit score, the credit score, affordability, and criteria. But assuming
basically look at the small print, because 10 years is a long time. So make sure you check the small print before signing the dotted line, or pay a professional. Clearly,
but if your circumstances do change, you do move, most lenders will allow you to port your mortgage subject to criteria at the time.
Another topic of conversation I've had 2 people that I spoke to in the last week discuss this with me as buyers, and they've asked about, I think people are quite switched on the fact that there's a lot of previously down valuations. So when we sell houses or apartments, surveyors are going out to look at the property on behalf of the lender. And I don't know whether it's the lender telling them to be a bit more strict, but they're basically saying, look, it's sold for X amount. We don't think it's worth that much based on the evidence. So it's actually, we're going to value it at Y, and leaving people in sort of pretty precarious situations. What's your views on down valuations, prices at the moment? Have you seen anything your side of things?
Yeah, it's been, to be honest, the down valuation. Statistically at the moment, last year, 1 in 30 homes have been down valuated on an average by £30,000 per house. Okay. And the reason that's happening is because there's the lack of supply. The demand outstrips the supply. So Ryan, as you are no doubt seeing, you've got several buyers outbidding each other for one house, and they're going over the asking price. And the issue you've got with land registry, once a mortgage completes, the time lag for 3 to 4 months for then that completion, that price to be recorded at land registry, means you've got that time lag. So surveyors are going around looking at the market comparisons, and they're out of date. They're out of date. They're 3-4 months behind, and the house prices move so fast over that 3-4 month period. There's nothing to support the sale prices.
So I think what's probably quite good for that's probably going to help with the down valuation situation is where prices, they've been increasing obviously over the last few months, but not quite at the same level. So we've almost seen almost the top of a bell curve here. So I assume that means surveyors have more opportunity to find comparable evidence to support the value and make sure the lenders are okay. They're not going to have issues with lending at the level.
Yeah, as the house prices start to not necessarily go down, I don't think there's going to be massive. I don't think house prices are going to reduce massively this year, mainly because the supply, it's still got the supply issues and still a high demand. But due to the I do expect the house price growth to drop, still increase, but not at the massive rate it has been at the moment. And as a result of that, if they don't start increasing at the amount they have been, the the comparables will catch up. So the time lag won't be so important. The data will reflect, will be a lot more similar to.
So it sounds like possibly going to be one less issue to deal with, but obviously we've got other issues with, I think you mentioned the stat earlier. You mentioned something about the highest difference between earnings to house prices. I saw a couple of statistics. I mean, what was your views on that then? It was just a couple of. Have you got a rough stat or how big the difference is at the moment, or?
Yes. So at the moment, house prices are 9 times or over 9 times the average first time buyer's income.
Wow.
Which is massive. So what you're, and when you think lenders are typically, say the typical first time buyer lender is lending a first time buyer 5 times their salary, there's for the mortgage, that means there's
massive difference.
That massive shortfall is typically filled up by deposit, which for first time buyers is normally bumped to mum and dad.
So going back to rates again, sticking with the first time buyer theme. So let's say if rates do hit sort of the 3% level, as we kind of discussed at the start. I mean, how's that going to affect with that 9 times gap for first time buyers and house prices? I mean, typically, are they going to have to earn a lot more? Or are they going to put more money into the deal? I mean, what sort of values are they going to be looking at difference wise?
So if rates keep going up and hit sort of the average rate is over 3% or 3% and above, I read an article obviously over the last couple of weeks, and they seem to think they're not from the facts because the lenders will obviously need to tweak their affordability rates from their stress testing if rates keep going up. That they project that the average first-time buyer would need to earn an extra £15,000 a year next year to buy their first home. So which ultimately will be pricing people out of buying.
Yeah. Which we've seen, and there's all this. They talk about all this help, trying to help people get onto the ladder, and affordable housing and that sort of thing. It's just, it seems like everything's stacked in everyone's favour. But the promising thing, and I know it's there's a lot of negativity around, and we're trying to get away from that. Ultimately, houses are still selling. There's still buyers around, and there's some good mortgage deals out there, isn't there? I know they're more than where they were 6 months to a year ago, but historically, they're still really, really low. So it's not all doom and gloom. The market's good. Property prices are leveling off, which I think a lot of people wanted to see. So at least we know where we're fixing at. And there's so many positive things happening in the local area. Crossrail being announced is going to bring more people into the area. For us anyway, I think it's still going to be positive for the remainder of the next sort of year, 18 months at least. What's your views?
I completely agree. Market's still buoyant. So rates have gone up and are going up, but they're going up from the lowest point in history. So they're still at record. They're still pretty low. You think rates have been typically 6, 7, 8% sort of 15, 20 years ago.
Yeah,
they're below 5% still. So rates are still at record lows. And as the housing market potentially might slightly cool off, there could be some deals to be had there as well.
Mm-hmm. Yeah. Well, there always is. You always know that there's a downturn in the market happening when you see all the investors come out the woodwork trying to buy below market value deals. But I haven't seen them just yet. But they should probably be around in the next year or so anyway. But there we go. Nice one. I think that covers off what we wanted to talk about. Cost of living at the moment, how that's affecting the overall mortgage market, the rate changes, individual cases for people. So I think investors need to be a little bit careful at the moment in terms of when they're getting their deals stress tested by the lender. They need to make sure that they are, the rate, the numbers they're going in with, the rental need to be spot on. First time buyers, obviously, it's always the same for them, but they need to earn more money to get the same house. So the sooner you can buy, the better. It's probably the best way of putting it. I know one of Ian's favourite sayings is, today is the cheapest day you can buy a house. And that's probably evident for the next year, 18 months, I'd say, definitely. So, Adam, anything else from your side of things? Any sort of little gems you got for us, or any other updates at all?
Yeah, I just one tip of in terms of what to do when interest rates are rising is, if you do have a mortgage, whether you've just bought a new home or you're remortgaging and you've had a mortgage for years, is don't forget most lenders will allow you to overpay your mortgage by 10%, free of any penalties. That makes sense. If your mortgage interest rate is above the level of savings interest you would achieve, it makes sense that would utilize your money better. And to give you a sort of real life example of the benefit of doing that, if you had a 250k mortgage on a 25-year term, paying an extra 100 quid a month would take around about 3 years off the life of your mortgage. So get so it'd be a 22-year mortgage just by paying 100 quid extra a month.
That's pretty cool, isn't it? Actually, that's a really good point. Actually, so whilst almost enforced savings, but if you can afford to put a little bit more extra into your mortgage each month, the benefits there in the long term definitely worth looking into, right?
Just make your money work harder for you, not the other way around. So
okay, there we go. Awesome, brilliant. Well, look, as always, Adam, thank you for your time and advice. Obviously, I have the luxury of speaking to you 2 or 3 times a week, but it's good to pass your knowledge on and information to everyone out there. As I said at the start, people watching, if you're watching this later and you've made it to 21 minutes, fantastic. Thank you very much. But please do put your comments afterwards. If you've got any questions, any of my clients that I'm dealing with at the moment, if you've got any specific questions you want me to pass on to Adam, obviously I always talk about him quite a lot, but I can pass them on to him directly if you need to. So Adam, where can we find you? Where's the best way to contact you or get in touch with you, my friend?
There'll be email, adam.davey@partnersfs.co.uk, and my mobile number is 07963 783 616.
Don't worry about writing that down, everyone. I'll put it in the description. It's fine. Lovely stuff. Great stuff. What's your rest of your plan? I think you dropped quite a big bombshell at the end of the conversation last time about your 12-week scan. So how's mum to be and little one doing? All okay?
Yeah, she's all doing well. She had our first scan, 12-week scan, a while ago now. We've got our 20-week scan coming up in 6th of June, and we get to find out baby's gender. So I can start painting the nursery the correct colour and stuff like that. And it's starting to get a little bit real.
Fantastic. All right, I'm good to hear. Good to hear. Well, look, as I said, thanks for your time, Adam. Obviously, we'll look forward to everyone probably mid-June when we do our next update. But any questions in the meantime, Adam's details will be in the description, as will mine. And we'll look forward to hearing from all of you soon. Thanks very much.